Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now, let's look at some of the stocks on the move today in Europe. We're joined by Bloomberg's equities reporter Joe Easton. SAP shares, the software company based in Baden-Württemberg in Germany, soaring this morning because of better than expected results. Why? Why did they do so well?
Yes, so SAP reporting a massive jump in their orders. Their orders in terms of the backlog growing close to 30% in the latest quarter. Now, analysts over at Deutsche Bank writing that this is a masterclass in resilience given the macro uncertainty. That stock having its best day in around 6 years and actually now cementing its place as Europe's largest company by market cap. So the cloud business seems to be the main driver of the order jump. So that is a step up. Their margins looking really strong as well, again getting close to 30% in terms of their margins expanding, so showing resilience, as Deutsche Bank points out, in a difficult environment.
But no such luck for Reckitt, a very different picture there, Joe.
No, so Reckitt did say that we are all buying lots of Dettol and cleaning our house, so that was a really strong part of the market. However, that hasn't been enough to make up for a drop down in the rest of the core business. So this is brands including Strepsils, lozenges, Mucinex flu remedies, and also all their other home products actually weaker than expected. The consumer goods company reported like-for-like revenue up 1.1% in the first quarter, but that was significantly below some of the analyst estimates. Some analysts were looking for close or above 2% in terms of the quarterly sales. So the stock down at close to 5% today, which is a big drop for a company that size. They are trying to offload a lot of their businesses at the moment in terms of some of their non-core units. Didn't really get much of an update on that, so potentially that is weighing as well. But Reckitt is a significant underperformer despite all that house cleaning we're all doing.
Yeah, well, it's spring. Don't you get that?
Spring
the
cleaning season.
Yeah, well, the sunshine suddenly streams in and I see all the corners and the bits that I've missed.
So you can't hibernate anymore.
Yeah, absolutely.
Get visitors around, need to clean up. So
absolutely.
That's the trend.
And maybe a new outfit. Inditex,
absolutely.
Positive news for them, coming back into fashion maybe?
Yes, so Inditex back in fashion now. This is a note from analysts over at BNP Paribas Exane. Now they are saying that Inditex, so this is the owner of Zara, of course, is a way to shield yourself from the downturn linked to tariffs. So the analyst over there, Warwick Okenez, says that Zara's agile supply chain, robust balance sheet and high margin structure means that it is a safe stock in an uncertain geopolitical climate. They note that the stock has only performed in line with H&M, but they actually think you should be selling H&M. So therefore, they upgrade the Inditex Zara owner today with a price target of around €56. The stock currently trading at 48, so significant upside still to come, around 15% from where we are now. One of the best performers in Spain at the moment, up around 1.5%.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.